if you've been in Bitcoin for a while, you probably know Michael Terpin. I remember going to the first conference in Santa Clara, I believe it was, right? San Jose. It was 1,300 people, I believe. It was really the first major Bitcoin conference. And in Momentum, all kinds of exciting things were happening. I remember seeing this guy stand up and announce at the end of one of the sessions, hey, I'm starting a group of people who want to pool funds and invest in Bitcoin startups. And it was the gentleman right here that's going to speak to you. And he's been instrumental in helping Bitcoin investors and blockchain, tech, digital assets, people get together, pool funds, and they've actually helped launch some really cool companies. So in this session, he's going to talk about what's happening in that space. We call it the digital asset space. And we're going to talk about, or Michael's going to talk about some new interesting projects that are coming up that without Bitcoin, these things would have never been, even dreamt of. And so I'm excited to hear what he's going to share with us, and let's give him a big round of applause, please. Michael Terpin.
Thanks, Steve. So I'm going to talk for about 15 minutes or so about just where I see kind of the ecosphere right now and where I think we're going. And then we're going to have 4 10-minute presentations for companies that are BitAngel companies or ones that I have an association with. I also put a shout-out to the BitAngels community about a month ago saying, hey, we're not doing Coin Agenda this year. Many of you may know I did a show last year called Coin Agenda right after the Inside Bitcoins Vegas. I had planned it when Bitcoin was $600, and a lot of my sponsorships dropped off. And so this year I decided I was too busy with a lot of other things. And Steve and I got talking in Chicago, and he said, I've been wanting to do a conference on Bitcoin investing. And it's just like, well, that's what the whole theme of Coin Agenda is. And you've got the better name. You've got Bitcoin Investor. So I said, why don't you take the slot that I already had kind of preloaded on a lot of the calendars, and I'll just do a party the night before, and you can do the conference. As many of you know, I had to cancel the party because my wife's father had a stroke over the weekend, a series of strokes. He's out of the hospital now. He seems to be remarkably, recovering pretty fast. And I think there's still 2 or 3 people in the room I have to refund the bitcoins they sent for, or the fractions of a bitcoin they sent for the party last night that didn't happen. Although Tone came over and we had a couple glasses of wine, so that was sort of in lieu. He's like, "Hey, I'm in town. Aren't you having your party?" He's like, "No, I can't do it without my wife. I'm not gonna, I'm a total bachelor when my wife's out of town, and she's like the ultimate, put on a 1,000-person party." So, at any rate, so I'm Michael Terpin. I did start BitAngels with David Johnston at the May 2013 Bitcoin conference, which was really the first conference outside of a couple of I think 2011 there were like 50 programmers and libertarians that got together into a room and said, hey, we're going to talk about Bitcoin and, how can we get beyond just like the Bitcoin QT wallet? And, that was really the first time that anybody invited kind of CNN. And what I thought was very interesting was that it actually was held in the same exact small room, the smallest one you can rent in the San Jose Convention Center, as the first Internet World was in 1994. And so I saw a lot of parallels. I'm looking around. I'd say the first how many people here in the room went to Bitcoin 2013? Okay, about a quarter of the room. For those who didn't, you'll remember it was I think 2 rooms about the size of this, and it had little 10 by 10 tables. You had like some great speakers like Eric Voorhees talked on the future of money. That was back when they let Roger Ver still in the United States, and you just I remember just walking around and there were maybe 20 little 10 by 10s, including Coinbase had a 10 by 10 with Brian Armstrong standing out front giving people T-shirts. Since then, they've raised $100 million. So, but I did see sort of this energy and this potential that just made my head swim. And I was just like, this is like being in social media in 2001. This is like being in the internet in 1993. And I have to just jump in with, both feet and arms and legs and everything else. And so I met David Johnston later that night. We ended up coming up with the idea of BitAngels. We just sort of started daring each other. I was like, why isn't there an investment group? I don't see an angel group here. This is in almost every other sector. And he's like, why don't we start one? like today. And I was like, okay, let's call it BitAngels. And he's like, okay, I'll put a website up right now. And we put a note on Reddit hoping to get 6 or 7 people to come and help us have a founding meeting. And I stood up and said, we're having that. And we got 35 people, including, Roger Ver and Eric Voorhees and all sorts of Vinnie Lingham and Jared Kenna. And, by the end of the week, we were 60 members, and, we're around 500 members right now. It's completely decentralized. We basically have, we were doing fairly religious calls about once or twice a month. When David left to do the DAPS fund, we sort of have been kind of figuring out what the next best step is. So we're doing kind of a combination of, we have a great Skype chat, we have a great newsletter to about 600 or 700 investors, and we do occasional go-to-meeting calls too and Skypes. We just find that with a global community, it's a little bit more difficult, and so I'm very open to suggestions. I'm thinking right now that we may end up sort of doing a BitAngels syndicate on AngelList for American investors and maybe partnering with one of the international ones for some of the international ones. Because right now, I'm also running the Bitcoin syndicate with Gil Pinchina and Nick Sullivan on AngelList, but we're really focused on kind of like Series A. And Gil wants to really even kind of move that to Series B, and I still think that there has to be a place where people who have an idea in the garage and need the first 50 or 100 grand to get started to go. And so that's sort of one of my big passions. I also run Transform Group, which is a PR firm, social media agency. We do some crypto consulting. I've been in the sort of agency world for 20 years. I'm probably best known in that world for starting a company called MarketWire and selling that in '06, which is why I'm in lovely tax-free Vegas and learned all sorts of things about how government works before I moved here, and I'm very happy that I did move here for the tax savings and stay for the real estate and the lifestyle. So I'm going to talk a little bit about where things were before I got in, which I'll call kind of Bitcoin Phase 1, where things have been since I've gotten in, which I'll call Bitcoin Phase 2, and where I think things are going, which I'm going to call Bitcoin Phase 3. And guess what? They kind of are pretty close to the halvings, which I haven't really heard anybody talk about too much right now, but it's important. Because as all of you know, the algorithm that Satoshi came up with, 10 million of the 21 million Bitcoins that will ever exist were disseminated in the first 4 years before most of us were involved. And, literally there's charts that show you how many people had wallets in the first year and a half. I don't think it ever got above 100 wallets. I mean, that's just how much Bitcoin, was sort of mined when it was incredibly easy to mine. The first 18 months, the hash rate was 1, right? Today it's 50-something million. 50 million times harder to get half the number of Bitcoins. So obviously, Trace and other visionaries who were passionate during that time, before there were the exchanges, when the only wallet was QT. These are the pioneers who built the industry, who basically just said, yes, we believe that there can be this decentralized magic internet money. And obviously, what we have now, when someone says there's no intrinsic value in Bitcoin, it's like, then how come I can go and send $10,000 all over the planet? It's because there are more than 100 people now who will take it, and we're just getting started. So in that sort of first 4 years, we did some amazing things in terms of the picks and shovels. I mean, and really the first seeds of companies that got funded were funded by, the early Bitcoiners who, maybe were mining a couple hundred Bitcoins a day with a PC. And all of a sudden the price goes up from a tenth of a penny to a couple of bucks, and they've got some money to go and, fund the first wallets and the first next generation of miners. Once it went from computers running CG Miner to graphics cards to FGPAs, and now you basically have sort of seen the end of the home miner mining Bitcoin, unless you just have an awful lot of electricity. You live in Washington State, and or you really need your house warmed up a lot in the winter. I grew up in Buffalo, New York, and near Niagara Falls, and I wish they would give the same kind of incentives, because they've got Niagara Falls right there to have mining in that area, and you'd be able to save a lot on heating bills, and all my family would be instantly becoming miners if that was the case. So, and all my friends would say, like, okay, how do I get a place in Niagara Falls? But that would be a very good business incentive for a fairly depressed area. But, when I spoke at the North American Bitcoin Conference at the start of 2014, I'd pretty much noted, and this is when we already had the run-up from when I got involved, and it was 120, and then it went down to 70, and then it had the big, Mt. Gox infused, many will say fraudulently infused, Willybot infused, run-up to 1,200, and then, the air started leaking out of the balloon. I still basically said that, people were asking me on the company side, when will we start seeing a Google in the space? And I had said, and I still believe, that you can't see a Google in an industry until you have a Yahoo. And you can't have a Yahoo until you have a Netscape, and you can't have a Netscape until you have a Cisco. And I think that the first wave of companies that needed to get funded, that happened in 2011, 2012, I mean, you needed to have, obviously better means of creating the Bitcoins with better machinery. So that was sort of the early miners, KNC Miner, Bitfury. Some of these companies were sort of the Cisco in a lot of ways. And then you needed an exchange. I mean, when 80% of the world was trading on Mt. Gox, that was a very tenuous situation. Now, obviously, you have 30, 40, 50 exchanges, so that one bad actor doesn't ruin the entire area. And I think that we're still going to see a boom in the future of decentralized exchanges, which where you're able to go and exchange things without having to rely on a central party. I think there's going to be a lot more security that's happening. Obviously, the security tools were very fundamental because so many of those first 10 million coins haven't moved. And have they not moved because they're being hoarded, or have they not moved because they were lost? We know a lot of them got lost. So when we say there's 14 point something million today, it's actually quite a bit less, so maybe 3 or 4 million less. So we're now in the second. And at the very end of that sort of 2009 to 2012 era is when you had these first picks and shovels, the wallets, the exchanges, the early miners funded. And 2012 was the first year that we actually have on record, VCs investing in Bitcoin companies instead of just whale Bitcoiners saying, here, have a couple hundred Bitcoins and we'll get you started. And in 2012, there was $2 million invested in the whole sector. And it was kind of funny when Bloomberg called me last week and said, what's happening? What's the problem with Bitcoin investment? We're only down to 80 million this quarter. We were at 90 million last quarter. And I go, we were at 2 million for the entire year, in 2012, and it went to 80. And last year it went to close to 300. And we I believe just this week with DCG's announcement and some of the other Money 2020 announcements, we crossed the threshold of $1 billion. $1 billion into Bitcoin and blockchain-related companies. So I think that, any kind of slowdown is just basically that we've gotten to the point where there needs to be some necessary consolidation. We don't need perhaps 45 wallet companies. We need, 5 great ones. We don't necessarily need 100 exchanges. So, and this is natural in any sector. So, and in the mining sector, obviously there's been some consolidation. Some people just didn't keep up. I mean, Bitfury's killing it. KNC Miner's doing really well. Places like Cointerra, who was an early company that pitched to BitAngels and got a few of our angels funding it, wasn't able to keep up. So in this second phase, after the first halving, where you did see the price go from being very flat in the sub $10 range, $4 or $5 most of 2012, and then all of a sudden 2013, you started the year at $13, you ended it at almost 100x higher. I mean, when it hit $1,000, there was just this, amazing recognition by the community that we had gone in a period of less than 4 years from having $1 buy 1,000 Bitcoins, which is pretty much what it was trading for in 2010, to $1,000 buying 1 Bitcoin. I don't know if you can think of any other asset classes other than maybe like, angel investments into Google. I knew some people that got Google at like $1. So they maybe got like 1,000x on that, but this is 1,000,000x, right? So kudos to the visionaries who basically created what we have today. So in that second wave, you also had things other than Bitcoin come out. You had the first, at the very end of the first section in October of 2011, you had Litecoin. You had Charlie Lee basically say, if Bitcoin's going to be gold, I'm going to create the silver. And, there's still, some first gen people who are, often referred to as the Bitcoin purists who are, let's focus on Bitcoin, let's not get distracted, all other coins are bad. And I think that basically cryptocurrency, the Bitcoin, the blockchain, and digital assets is something that I've heard. I've been using secure digital assets for a while. And Bobby Lee from BTC China, now he's going by BTCC, was just using digital assets every 5 minutes at the events I saw him at last week, including his panel. And I've decided that I'm going to adopt that, and I'm going to start spreading it, because I think digital assets actually says very well what Bitcoin blockchain, what altcoin blockchains, what private blockchains all have in common is that they're digital and they're assets, as opposed to digital and you can just replicate them. It's a unique asset, whether it's a software asset, whether it's gold that happens to be stored by Bitcoin having it, backing it, or whether it is some other asset that is backed by it. And I think that asset-backed cryptocurrencies is part of the next wave, and one of the 4 presentations coming up is going to be talking about that. So we also had, during the second wave, the dawn of regulation. In 2013, all of a sudden, the IRS finally said, all right, there's a couple of people that actually have Bitcoins, and it's probably more than $600, so we have to figure out how exactly to treat this. And so they treated it as property, which was probably the way that the government could make the most money, because if they treated it as a foreign currency, all of a sudden, you got it at a penny and you sell it for $1,000. You don't have to write off your gains unless you're a professional currency trader on going back and forth between Europe and the U.S. and you get euros at 107 and then next summer they're 113. Nobody's going after and saying, where's that 6 cents of taxes? So I think that property has made it a little bit more difficult to sort of follow the rules. We worked with the launch of a company called Libra Tax, which if you haven't used it, it's a great free service. And they have a $20 upsell that basically just spits out all the paperwork for your accountants, and you just take your addresses, and it says, you say whether it was income or whether it was an investment, and then it just calculates your capital gains and spits it out for your accountant. It really made my taxes a lot easier in 2014 than they were in 2013. And then also the dawn of sort of blockchain, as opposed to just simply saying Bitcoin, the technology. And I think it's called blockchain because it's not just the Bitcoin blockchain. In fact, right now, Wall Street Journal today, there's a story that basically quotes Ryan Selkis, who works with Barry Silbert. He also writes The 2-Bit Idiot, saying, so right now if you're trying to raise money, you need to take your plan, erase the word Bitcoin everywhere, and put in the word blockchain and then resubmit it. Which is a little bit skeptical if you basically have a Bitcoin business plan. I mean, what, are you going to have a blockchain exchange, a blockchain wallet? But, right now, the new money that's coming in is the banks, the corporations who are saying we want to have a private blockchain. And there's pros and cons of that. But, the Bitcoin purists are everything that's not Bitcoin is evil, but there are reasons to have other coins. There are reasons to have app coins, to have altcoins, to have layers, to have 2.0. I could spend 3 hours just going into all of the different variations. But I think that the market will choose what works. And I think that also, the Internet, it's great that it's decentralized. I mean, there are governing bodies, but you don't have one company that can say, hey, we're going to change the Internet now, we're going to put a toll road on it. Right, so it was created by the U.S. government, but for it to spread, it needed to really be, the W3 and ICANN and all the different standards group. There's no one place that controls the Internet, and that's how we were able to build something so big. As Trace was saying, how many how many developers on Bitcoin versus developers on, name another coin. However, as things get built on Bitcoin and Litecoin forks, that means that you will have the ability to sort of transfer your knowledge as a Bitcoin developer and as a developer on some of the other major blockchains into new areas. And I think we're going to have a boom of people who are innovating on these private blockchains. Because, first of all, I think the original reason why people wanted to go private blockchain, the companies, was because they're like, well, we want to just own this. We don't want to share it, or we don't have to worry about the Bitcoin price. And sometimes it was a little bit ludicrous. I mean, I was speaking in Ireland last summer, and this woman stood up and said, I don't understand this. Why don't we banks just get together and buy all the Bitcoins? And I didn't quite understand how that worked, and okay. But, now it's like kind of that was a little old lady, but now it's sort of people saying, why don't we fork Bitcoin and just simply control all the keys and say there is no value. This is software, which many of the well-known players that started out saying they were going to use Bitcoin as their blockchain are now using a different blockchain, because they can go and say, hey, not only can you own it all, but arguably now, we'll have to see how New York reacts to this, if it's not traded on an exchange and you're simply using it to develop software, why would you fall under any regulations? It's a piece of software. I mean, MongoDB is not regulated by the New York State Department of Financial Services. So, similarly, there's other things that are covered under existing law, like crypto, like in-game currencies, like loyalty points, and I think there's going to be an explosion in those areas. One of which we're going to talk about a little bit today. Okay, so the third area that I'm going to discuss is sort of what's going to happen going forward. And I think, again, this dawn of digital assets. And I think that as we move toward the halving, I think I was talking to Trace earlier about the rising tide lifting all the boats, right? So a year ago, the price was 300 in October, and everybody was panicking that it was getting down to 300. I remember one VC actually saying, if it gets below 300, I'm selling all the silverware and buying everything I can. And I texted him and said, I hope you're selling silverware. And, of course, it went down at, what was the bottom for about 5 minutes, 175, right at the start of the year. But I think, we had to shake a lot of bear activity out of the marketplace, and I think that there are new buyers coming in for a lot of different reasons, which have been talked about before and will be talked about the rest of the show. I do think that these new digital assets were going to come in a number of different categories. Some of them are going to be jurisdictionally devised. So, the Fed coin has been talked about. There's another coin out that is basically, sort of here's something that's hyper-regulated so we can use it in this jurisdiction. Then, of course, I think there will be new generations of dark coins, Monero, Cryptonote, the variants that will not be bought on exchanges because, what good is it buying a dark coin on an exchange, right? They know who you are because they can track the exchange purpose. I think that the dark coins have to be mined if they're going to, sort of be used for the purpose of darkness. There's wallets, there's all sorts of things. But, one thing we've seen for sure is that, excess regulation doesn't protect anyone. It basically just drives innovation to route around it, and it makes it more difficult for just people who are normal businessmen trying to function and innovate. So within this new era of digital assets, I think you'll have a new boom in home miners. The most funded company this year was 21, which basically is, letting you eventually your cell phone will basically mine Bitcoin, and you'll be able to then use it for blockchain purposes. I'm not quite sure why you wouldn't want to just simply have a wallet there and use something that's a lot less expensive than Bitcoin to do the same thing. And you're going to have stacks that are built on top of stacks, meaning companies, right? Because even though the internet is really controlled by no one group or country, Google is, and Amazon is, and Facebook is, and yet for the most part, those are fairly trusted entities. And they could certainly go rogue, but it's not in their best interest, so they don't. And I think that you will have, Coinbase, yes, they could be shut down by the government. I'm certainly a believer in holding your own private keys. But, and I also think the gentleman asked earlier about, the typical, non-techie person doesn't know how to hold their own private keys. These are solutions that it'll be so easy to hold your own private keys in the next, I'd say 12 to 24 months. It'll be something that, yes, you can show grandma how to do it. Airbits, Bread Wallet, they're already getting close. That's pretty much it for my my opening foray. I've got time for one or two questions before we then bring up some companies. All right, so if I can bring up the presenting companies, Jim for the Voxels pitch, and Simon from WealthCoin, and let's see, I guess Sinclair isn't here, but his partner from Bitmari, and Stephen from Rivets. Jim Blasco, another Vegas guy. I met actually a year ago at the Hashers United, and he's the creator of Unbreakable Coin, which is a truly unbreakable coin, one of the SHA-256 coins out there, and a number of other things. And when we met, it was like when I met David Johnson, and we had all these great ideas for sort of the investment aspect of Bitcoin. Jim and I are just really kindred souls in terms of figuring out what we can build together. I'm a business model and marketing guy. Jim is an Uber tech guy, and we put our two brains together and came up with some great ideas. So we started this thing called B-Commerce Labs. We're partners in that. It's a fund that is then incubating Idea Lab style companies, and we'll be announcing the first two in the next coming weeks. One of which we're hoping to have rolled out by the end of November. Before we started that, though, we worked on a project together. I got a call from Halsey Miner, who's the creator of CNET. He was actually hoping to be here today to do the pitch, but he had to fly to Mexico. So Voxelus is, so Halsey, for those of you who don't know, is the creator of CNET, co-founder of Salesforce, started Vignette, which became a $26 billion company, co-founded what became Google Voice, and flash forward to today, he started BitReserve, which recently rebranded itself just last week to Uphold, in large part because there were certain countries, if you had the word bit in your name, they didn't want to do business with you. And they're actually looking to do what Trace was talking about in the seventh level of Bitcoin adoption, which is being able to have USD, euros, oil, gold, Bitcoin just automatically be able to move back and forth when you're an Uphold account holder. Because you do KYC once on both ends, you're done. And it's very quick to do that. So Halsey also wants to become sort of the king of virtual reality, and he's got a group called Reality Lab and a fund called Miner Ventures, and he's popping out several VR companies, one right after the other. The first one he's been working on actually for 5 years in Argentina, which has been discussed a lot today, called Voxelus. So if you go to voxelus.com, you have any interest in virtual reality, it's basically a plug-and-play system where it's end-to-end. You go in, you're able to go without any programming skills and just drag and drop and create a virtual world, a virtual asset, and then publish it, and then put your glasses on, and you can then play with your friends in multiplayer mode, which is really cool. And so that's free. We got 20,000 downloads the very first week when we announced it at Oculus Rift last month. And the viewer's free. And then at CES this year, we're going to roll out the preview for the marketplace. That'll be the App Store. So the App Store, what's making it unique and of relevance to this industry is that the App Store will not take dollars. It will not take credit cards. You can only pay for it in voxels. So we were asked, Jim and I, to sort of design a currency. Eric Voorhees also consulted on it. He's an investor in the project. He's doing the Shapeshift crowd sale, which is, by the way, pretty much the only place you can go right now to get crowd sales because Coinify now is doing blockchain programming at the VC's recommendation. So without further ado, I'm just going to do a quick so we're right now in the private sale period. The public sale starts on Monday. But if anybody in this room, since there's a lot of investors, is interested in the private sale, I will give you the code. Just come up afterwards, and I'll give you the code to get into the private sale. So again, this is the Voxelus platform. First all-in-one content creation. Just games alone is expected to press $12 billion by the year 2020. And Voxelus controls the software, the viewing, the marketplace for all the major platforms. This, again, is going to be the marketplace. They've got a couple of hundred assets now. They're looking to bring 400,000 assets through some partnerships, and then also through people who are going to just be downloading the software now, creating them, and selling things. Also some branded things like Fast and Furious cars, so you can play with those things and Star Wars characters in your own world. So one of the areas of the basics is that Uphold announced this when we announced the same week that we announced the crowd sale that they would be supporting the voxel as the only cryptocurrency other than Bitcoin. And what that means is that by the end of the year, when they have the euro is already operational. The USD is going to be operational in a few weeks. They've got Chinese currency, RMB, Japanese. You'll be able to go and store your wealth in any of these currencies and just move it back and forth because it's a non-fractional reserve. And if you go to uphold.com, they've got a very good a video that explains that they brought in this rock star CEO who is the former CIO of Barclays Bank and of Nike. And so that obviously will help the liquidity, and it'll be the voxels after the crowd sale will be trading on Shapeshift, on Uphold, and on a couple of other platforms we haven't announced yet. So, and again, there's your voxel card that you can basically just use like a debit card by the end of the year. Same thing with Bitcoin, same thing with USD, and just move things back and forth. And Jim, do you want to talk a little bit about the coin itself technically?
Okay, so we basically took Litecoin and we cloned it, just like I cloned Bitcoin to make Unbreakable Coin. It was really not too much special. The technology was there. Satoshi was a genius. Charlie Lee as well. These guys came up with the right platform, the right idea. We took that. We did a different approach where we pre-mined all the coins right away. And those coins, they're only selling 15% of the coins to the public. They're going to hold the rest of the coins. It has a 2.5-minute block transaction, so it's pretty quick. You can transfer coins about 5 times faster than Bitcoin in most cases. It's an average time speed, but it's pretty accurate. It's just as secure as Bitcoin or Litecoin, and it gives, for the first time, users the ability to have their own economic system in a virtual reality world. So anybody who uses this Voxelis, which they're planning on plenty of people are using it, and it's open source, so any virtual reality products that go into this, whether it's an application or just a chair, people are going to be able to sell that to other people, and this is going to be the only cryptocurrency, the only currency that will be used in that world. So I think that's pretty impressive right there for a new crypto coin. A lot of times these crypto coins, even Unbreakable Coin, was released without knowing what we were going to do with it. It's just there. And that's how most of these alternate crypto coins are. They're just there. A lot of them don't have platforms. Ethereum has a plan for a platform that sounds pretty good, but it's still not here. Voxelis is an existing platform. It's already here. The only thing that's not out there are the virtual reality glasses. They are available, but they're about $300, and I believe in the first quarter they think they'll be about $100.
They're going to go on $99 for the Samsung one at Christmas, and there's about 500,000 on the market. They're talking about it being, the analysts are predicting it'll be 50 million per year sold by year 2020.
Yeah, I mean, when you start thinking about things like video games and how big, that's pretty much the biggest industry out there is video games and what it brings in. Now we're going to have it in virtual reality. And it's not just going to be video games. They have a lot of other ideas. And one of the cool things I heard Halsey Miner talk about was, you know, they were looking at a very, very, very expensive camera that they could take to concerts. Just imagine for a moment that this camera was here. And you had these...
And we actually showed it last week. It works.
Yeah, it's wonderful. And if you have the virtual reality glasses, you could have been at this convention in virtual reality. Every time you turn your head, you would have seen somebody else behind you or beside you. And it's pretty awesome. This virtual reality is exactly what you've always thought it was, but now it's about to be in our hands. And 2016 is probably the year for virtual reality breakthrough. It's finally getting affordable. And they've made it open source so that anybody can take this virtual reality products that get made there and use it on other systems. So I'm pretty impressed, and I said I wouldn't really get involved in making any other crypto coins unless it had a really good function, and this has probably got the best function that I've ever seen from a crypto coin.
Thank you. And that camera is called Quantum Leap, and that will also be using voxels for the concerts. So this is the team. again, Martin Repetto also was the founder of Atmosphere, which was a very popular game a few years ago, massive multiplayer, got hundreds of thousands of users. I talked about Halsey's background. And the pre-sale is going on now until midnight on Halloween, when all the witches and demons and warlocks are done. So is the crowd sale, the pre-sale, that is. And then we have one day to just sort of like take a breather, and 9 a.m. the public sale starts. And it'll be one day only where it's 1,000 voxels per Bitcoin. During the pre-sale, it's 1,200 voxels. And then, like a number of the other sales, like Ethereum, like MadeSafe, like Augur, they then have a range where they go down. And then the last available way of getting in the crowd sale is between November 22nd and December 2nd, when it's 750 voxels per Bitcoin. And then after that, Voxelis has committed, and this is one thing that's cool about, I know a lot of people think anything pre-mine means scam coin and this and that. None of it's done responsibly, because during the crashing price of Bitcoin, when, we had all the things of just sort of recovering from Mt. Gox, et cetera, it would have been nice if we could have sort of said, hey, let's hold off on the new Bitcoins being issued until the price comes back, right? Couldn't do that. It was already built in the algorithm. And here, Voxelis has pledged that they will not sell any of the 85% at a price that is any lower than or equal to the highest price that anybody paid in the crowd sale, so 750 voxels. And so they'll have it on their site, for 650 voxels per Bitcoin, and they won't sell any until if Shapeshift is selling them for less, then you buy it on Shapeshift, but there will be no new coins released until the price is higher than the number you see here. That's it. If there's any one or two questions, then we'll go on to the next presentation. Yes.
What about the amount of boxes that can be sold by developers or early investors? Even if they can't sell it below resale costs.
Sure. So yes, the people who are the people. Right. So good question. So yes, anybody who buys in the pre-sale or the crowd sale will be able to trade on Shapeshift once it goes into trading, which will be shortly after that, just like MadeSafe, just like Ethereum, et cetera. Yes, those will not be released until the price is above. So in other words, if it takes 20 years for the price to get above, then they would be releasing it in an orderly fashion to support the price. I mean, right now they're fully funded by Halsey Minor. They don't need to start tossing coins on the market in any way that would hurt the price. And the price, if it ever goes below the highest price paid in the crowd sale, they will stop selling. Mm-hmm.
And then one of the developers gets disgruntled and wants out of the company and has a whole bunch of them and just sells millions until it gets down to the price of resale and everyone.
Well, the developers don't own any. The company owns 85%, and the people in the crowd sale own 15%. The company, correct.
It's to my understanding that the company doesn't want to sell the coins. They want to hold them and use them for developer payments. So if they want to expand the system somehow and somebody wants to, it'll be a payment system for them. They may release 1,000 voxels to them for a payment of something. That's how I've understood it. Now, the other thing what he keeps mentioning about they're going to honor a price on the coin. Whatever coins are out there, they're going to honor it through Uphold, and Uphold's now the largest Bitcoin exchange in the world. They transact 20% of Bitcoin transactions every day. So they have the ability with voxels to trade for metals, gold, any currency throughout the world, and they've agreed that they will never sell the coins or they will always honor the lowest price or the highest price of the crowd sale. So basically anybody who bought in at 30 cents, they're always going to honor it at whatever the highest price was of the crowd sale, is how I understand it.
Which is 750, depending on what price of Bitcoin is that day. So it would be about 40 cents based on today's price. Yes.
And that's through their exchange Uphold.
Yep. 20 years, they run out of coins. I'm sorry, who's going to... Oh, okay, so CNET is still around. Obviously, if you think that virtual reality is going away, or you think that the companies that are being started here and other companies will be adopting this coin as well, then you shouldn't buy the coin.
I guess anything's possible. It's all crypto is a risk.
Yeah, and Halsey has said that if the company gets sold to Samsung or something, a condition of sale is to maintain the exact same policies that the company has today. Yes. Bitcoin will not be able to be accepted in this game. Right, you have to own voxel to be able to buy assets in voxel in Voxelis, as well as in Quantum Leap and some of the other VR platforms that are coming out from Reality Lab.
They couldn't honor a price on Bitcoin. They can't honor a price on Bitcoin. They can't say if you guys buy 1 million of these. I think the total crowd sale, if possible, would be about $9 million.
If everything's sold.
If everything sells at 15%. They could never honor that with Bitcoin. They couldn't say that we will honor a price at this point. If you bought in right now, Bitcoin is, $315, and it goes down to $100, they couldn't honor it at $315. But having their own cryptocurrency allows them to honor that price. It can be exchanged for any type of currency in the world or any.
Right. So these prices right now are only through the crowd sale. So the price once the crowd sale ends, obviously, if Bitcoin goes up or down, then that's gonna change that. I believe actually that because of the fluctuation of price, that they're going to pretty much be looking at it not going below what the last day equivalent in USD is. So.
And actually, I think you're going to see corporations starting their own coins left and right now. We've actually have a company called Coin Create here in Vegas where we're starting to build crypto coins for corporations, and this was the first one. We're going to see a lot more of that because companies, they want to adopt Bitcoin, but they can't always just say, we're just going to take Bitcoin. It's pretty volatile. But if they have their own kind of crypto coin, which they've pre-mined, and they own all the coins, then they can set a value of that coin as far as usage on at their store. For instance, kind of like the arcade. You'd go to the arcade, you could buy the tokens, and you might not use them all, but you'd go home with a couple tokens in your pocket every time you left the arcade, and that would make you come back. It's kind of like that. They want return business, and this is their way of having their own economic system and using cryptocurrency to protect the users instead of these token systems that are out there.
And so I don't want to hog any more time than that. I'm going to be around the entire rest of the show as will Jim.
Sorry, guys. We got to move on.
And so we're now moving on to Stephen.
So I would like to introduce you to Rivets. I came into the Bitcoin space about 2 years ago. And prior to that, I spent almost my entire career in the trusted computing space. So I've come out of a world where we were building hardware security into all sorts of devices. And one of the great challenges was, how are we going to use it? And one of the great problems was who's going to run all the keys. And when I went to my first Bitcoin conference, one of the things that was obvious was here was a community that had a great system for management of keys, but didn't really have a great idea on how they were going to protect all your individual keys for your money. And so if we could have merged the 2.5 billion PCs that have hardware security devices on the motherboard to protect your keys with this little new experimental project of a blockchain which could store the 2.5 billion keys, that'd be cool. And so that's what's been driving me over the course of the last couple of years. And so Rivets is a new startup we've been around working on the technology for about a year. The company's idea was a couple years old. And what we're doing is building a general purpose toolkit that allows direct access down into the hardware of a device, now specifically in mobile. And so you're familiar with these technologies. You've seen these little companies do things like Apple Pay and Samsung Pay. This is taking advantage of those primitives in the chipsets of those devices and exposing it in such a way that anyone who's building a wallet can have advantage exactly the same, if not better, advantage to the hardware security that's within, for example, a Samsung device. So there are millions of devices with embedded security. About 1.5 million a day are shipping. So if we can now put a Bitcoin wallet on 1.5 million hardware devices a day, it's fun to talk about it as Bitcoin, but I like to think of it more as money on a phone. Really, what we as consumers want is money on a phone that works. And one of the fun things that we just came from Money 2020, everybody's talking about mobile money, et cetera. One thing's important to know is you can't spend money with Samsung Pay on the internet. It only works at a store. Well, because they use 20-year-old technology inside these devices in order to do the payment rails, so it only works with a point-of-sale terminal. So we like all this idea of digital value and digital assets and digital money, but it's cool that I have this new fancy thing and I can't spend money on the internet. And we also see that the business model is moving, right? We're moving from a purely ad-supported internet to subscription, like Halsey's new company. You're going to buy your latest and greatest Ferrari with machine guns for your virtual reality game, and you're going to put it on a digital asset chain. It's going to be great. And hopefully it's a limited edition Ferrari so that you buy it for a few dollars today, and it's worth, a few hundred times the value of it when you take it down to the Mecum auction later on in life to sell it. And blockchain is emerging as really a great mechanism for modernizing this distributed trust. So blockchain is a new model for trust. I think one of the most important things is we're moving from a world where we trust a central authority, somebody who runs a trust promise, to we're trusting math. And that's the fundamental change. Once we pushed go on the blockchain, ever since then, there's no one in charge. There's a community that can alter it, but there's no one actually in charge. And so really what's in charge is math. And that's a very important construct in this whole space. There's a problem, however. When you look at the blockchain and you take any one single element on the blockchain, I know it happened after this one and before that one, and I know what happened. I just don't know whether it was what was intended to happen. It's just an event. And so bringing security is how we add that context of intent so that I can prove that, for example, you had your device with your key that performed that transaction and not that somebody else borrowed your key and performed that transaction. Or that the transaction that was done was the one you intended to have done. Was it what you saw on the screen? You said, send 10 to Michael Terpin. Great. But the software sent 27 to somebody else. So security is moving to hardware. Anybody who doubts this, go look at Apple Pay, etc. The value is there. Today, you take your Apple Pay device, you can use it on the underground in London. It is not because we couldn't put keys in hardware devices and make them work with the underground in London. It just wasn't safe. If you're going to modernize the entire video game industry to put tokens, trust me, the kids will figure out how to steal the private keys. Fraud will be rampant. Contrary to popular opinion, we have not been able to hide a key in an operating system. We just haven't. We can't hide it in Windows. We can't hide it in Apple. We can't hide it in Android. We have, however, been able to hide keys in hardware. That's what the SIM chip on your phone is. The reason why you're getting text messages these days with, please type this password in after we text it to you to determine you're really who you are, is because all the industry is borrowing the security of the AT&T SIM module to pass that text through. Of course, that's not actually really real on Android because you can replace the texting thing. Just as a note to everyone, like if you download that little app that says, hey, get text messages that are a bigger font, yeah, it might actually be sending all of your text messages to some other country, including all the 6-digit codes that are confirming it's really you. So there are a number of capabilities. I'll talk about a couple of them, but most important in this are the concepts of secure display and secure PIN entry. So we can hold a key in hardware, but these devices also have the ability to put a message on the screen that cannot be altered by software in the phone, in the operating system of the phone. And also a PIN number that can be typed into your screen that cannot be stolen by the operating system. And the way it works is that there is actually in the chip an interrupt. We stop the operating system, hand control to a second computer that's locked up in that chip, and perform the transactions on that isolated hardware, which is not live connected to the internet. So you're accomplishing this mission of, let's go put all your Bitcoin on a Linux server in the closet, lock the door, and never let it onto the internet. You're just doing it inside a Galaxy S6 phone. So what we're trying to do is make it easy to install and easy to deploy. These are not simple technologies. You want to get up in the morning and start. You can spend the better part of a year and a couple $1 million actually enabling the capabilities. And there are a couple of companies that are beginning to explore this. What we're trying to do is provide a general purpose tool set so that anybody, whether you're doing encrypted messaging or identity or blockchain tech transactions or Bitcoin, can do those transactions within this isolated environment and hook it up in a week or two. We have a number of companies that have agreed to work with us on this. We have them in varying stages of playing with the technology. It's been a fun and interesting experiment. We're about a month or so away from launching the public version of our tool set. We have a number of companies already working with the private version of our tool set. It's been interesting to get the ecosystem operation. We spend half of our time trying to make sure that when you deploy an app on various phones, like an LG phone we had a great fun entertaining issue in Japan all summer where they pushed the wrong policy to the Japanese phones. It was great. And when you're like three kids in a canoe trying to tell Samsung they pushed the wrong policy, it's actually quite a funny conversation. From a go-to-market perspective, we as a company, what we're doing is we're very developer-focused. Really, at the end of the day, it's all about improving the quality of the relationship that developers have with their customer. But we're also bringing on new technologies. We're working with a number of the biometric sensors so that fingerprint is directly integrated into our toolkit and a number of other capabilities. And we've been to see a bunch of the major OEMs, and there's nothing more fun than running around China explaining what a Bitcoin wallet in a Mitsu phone looks like and what are the core features that they have to have in hardware and how do they make it better. And while you might think that, well, maybe they're not that interested because Bitcoin might be a little bit scary in China, turns out they think that the huge market in front of them is India, right? And so they're actually rest of world, like all of Africa, all of India. There's a few other people than just U.S., and they're really interested in payment. And we're not going to have Mitsu Pay and ZTE Pay. It's too complicated. They just want to support payment rails that are out there. Bitcoin has a huge advantage. Today, I can't do digital money using Samsung Pay, but I can use a Samsung phone to do Bitcoin that does the most secure digital money you've ever transacted. So anybody who's ever done e-commerce, like most of us have, a couple times, we can actually finally do it securely, that the money you send is the money you send, that what you see on the screen is actually the transaction that happens. There's no password to be stolen because it happens in isolated execution. So this is like making e-commerce work for the first time after 20 years. Just a few devices. Like I said, 1.5 million a day. It's growing almost daily. So this will pass 1 billion devices installed within the next year or so. And it's really built-in security. This is what makes it simple. The consumer will perceive this as money on a phone. This is push a button and spend. I have more than a few arguments about PIN numbers. Everybody thinks you want a PIN number. It turns out in London, if you get an NFC debit card, you can just tap and pay up to £50. You know what the number one complaint is with Apple Pay? You have to use your fingerprint. Because the regular plastic card, you just tap and run away because you're buying a coffee. You have your phone. The number one protection that's in all of this stuff is if I take your phone, you notice. By the way, if you're 17, you notice in like 12 seconds. Almost done. So how do we make money? We charge on a per device, per app basis, and we provide engineering to help support it. This is a business model that will grow to hundreds of millions of devices and potentially thousands of app vendors. What protects us as we enter into the Chinese market to help those handset guys use our tools, they could copy our tools in a very short period of time. What really protects us is the relationship with the developers. They don't have a presence in the rest of the world to sign up everybody doing, whether it's Bitcoin or secure messaging or access or entertainment. They really look to say, oh, you can show off the cool features we put in our phone because the operating system doesn't expose them yet. And so from a milestones perspective, tools have been built. They're coming public at the end of this year. We have actually a couple of very significant revenue contracts we're working on right now. We'll close before the end of the year. And this company will be self-sustaining by middle of next year. The initial drive will be a series of development and non-recurring engineering contracts, and after that we're supported on a transactional basis on a long term. And that's what we do. And if there are any questions, happy to answer them.
Thank you, Stephen. Questions for Rivets? Yes, in the back.
So we have no intention of shipping a wallet. We have built a demonstration wallet, which we've shown around. It's pretty ugly. It's somewhat intentionally pretty ugly, just to show that the functionality is all there and to help us test it. What we're doing right now is actually we are in the middle of, haven't quite finished, a complete extension of the Bitcoin J wallet with the Rivets tools embedded. And so anybody who's building off the Bitcoin J source can just go use that and have at it, build their own thing. And we will look to extend that to the other different open source wallet fabrics so that you can see how it should be done. But at the end of the day, it's basic tools. You can implement them yourselves.
I'm going to be Phil Donahue and walk around here. You had a question?
Yeah, you're talking about security on the hardware, the forget what you called it, the trusted execution space. Would you please describe for me the physical reality of that? Which chip is it, and who manufactures them?
Okay, so the history of this is very simple. ARM, in 2 or 3 generation ago processors, actually made it possible to have an isolated execution space in the ARM processor. That's been around for a while. The problem was that you used to have to call the manufacturer and write firmware you put in the phone. 2 years ago, a company was formed called Trustonic between ARM, Gemalto, and G&D, the 2 big SIM chip companies, and ARM, and they've made it possible for us to provision this capability over the air after the phone is shipped. And so Samsung, LG, HTC, Mitsu, ZTE, a number of others have shipped Trustonic in their phones. There is also a core capability now being exposed by companies like Qualcomm and AMD. And actually, Intel has a similar architecture, but done by Intel, which is just coming to market, that they call SGX, or Secure Software Guard Extensions. And so, as those capabilities become available to us, we will port our Rivets toolkit to support the other platforms. But today, we build on top of the Trustonic platform. And so what happens is a unique build of code is pushed into your phone, signed by specific keys in your phone from the manufacturing chain all the way up, that's isolated from the OS. So unless you've compromised those hardware keys, you can't put rogue code into the phone. And so this is, when you think about protection, you should always think about a vault, right? If you go out to Staples and you buy a little safe and you bring it home and you put $100 worth of gold in it, it's probably fine. Put $1 billion, well, billion is probably too heavy, but you put $1 million worth of gold in it, you should bolt it to the floor, because it's really easy to come in the house, just pick it up and walk out. If you want to put $1 billion worth of gold in it, you probably ought to put some anchors into the concrete and build bigger walls. And this is, you should think of what Rivets does as about $1 million vault. Like if you have $1 million and you want to extract the keys, or you're threatening to blow something up and there's a message protected, you can spend $1 million, and you have physical presence of that device, you can take it apart. If you have just software access, so just over the air, the Russians want to spend all the money they want to break Bitcoin, you can't break it over the air.
Okay. Any more questions, or we move on to the next presentation? Great. Thank you, Stephen.
Right on. All right. Hi, everybody. My name is Stefan, and I'm the CTO and co-founder of a company we're calling WealthCoin. So at WealthCoin, our premise is pretty straightforward. So we noticed that investment services in countries outside of North America tend to be sparse, hard to use, or even non-existent in certain cases. So we set out to sort of see how we could tackle this pain point. And unsurprisingly, Bitcoin helps out quite a bit. So with Bitcoin, essentially what we use it for right now is, as it exists today, no fancy blockchain tech, just as a payment rail. So a payment rail to fund your investment account with us. and then, of course, a rail to get the money out of your account, potentially, as well. And so this way, we can kind of provide unprecedented access to investment services that we haven't really seen before in many countries around the world. So the other key component here, and where Bitcoin becomes involved once again, is that the portfolios themselves have to be Bitcoin denominated through and through so that we can stay in cryptocurrency and we don't have to get messy switching between fiat currencies or sort of looking at gains in fiat and whatnot. So we went out and we built portfolios. We currently have 3 really well-balanced modern portfolio theory style portfolios. They look somewhat like this. This graphic is really fluffy, but we're investing in global equity markets, so ETFs on the S&P 500, the Euro 50, the German DAX, sort of you name it. And what's cool is that we've invested in these as Bitcoin-denominated assets. So we have a broker provider in the UK who provides these contracts on these equity markets that track in Bitcoin. So the delta in the price of the asset is paid out in Bitcoin, which is really important so that we stay in cryptocurrency the whole way through. The other key component, if you're familiar with modern portfolio theory, is a debt component. And so for that, we're using peer-to-peer Bitcoin loans. So you might be familiar with like BTC Jam or Loanbase. So we have auto-index partnerships with both those companies in order to sort of create a debt component in the portfolios. So this is a quick preview of the product. I wanted to do a full demo. Worth noting that these are real screenshots. So we have a working demo on iOS, and of course the back-end infrastructure is built out. And yeah, it's a really simple process. It takes less than 10 minutes. You can deposit. Well, you pick a portfolio first, and then you can deposit some Bitcoin. And if markets are open within about 10 minutes, you should be trading, which is pretty cool. So this is our team. Jackson Greathouse Fall, our world-class designer and head of product, came from a mobile search startup. Simon Burns, very relevant. He's our CEO, co-founder. And he came from Robinhood, which is a relevant fintech company in the space. They did sort of like feeless mobile stock trading. And he led marketing communications for that team and took it sort of from unknown nascency to a bit of hype and success. So he's a really valuable member of the team. And then myself, already introduced, Stefan. I have a kind of a heavy mobile engineering background. Recently was StumbleUpon, building some products. And we think we're the team to build this because of our sort of diverse skill set. Myself bringing a stable, scalable platform, Simon being able to sort of communicate it to the world, and Jackson making sure it looks beautiful all the way through. So not only do we have a great team, but we're starting to partner with some really great industry leaders. So Coinbase, notably, is helping us out with hosted wallet infrastructure, as well as providing us early access to some of their payment method APIs, so acting as an exchange. So this is important for us so that we can sort of blur the line between fiat and Bitcoin, so that our users don't necessarily have to have Bitcoin when they approach WealthCoin. They can approach it purely as an investment option and be sort of onboarded into Bitcoin as quickly as possible thanks to Coinbase. And we have some quotes from notable people. The Snapcard integration is interesting as it goes sort of the other direction. So with Snapcard, it's sort of a trial of our API, which we're rolling out with them in early January. And what that'll look like is it'll be a WealthCoin account right there within your Snapcard wallet. And this will be replicatable to other regional wallets, so globally again. So yeah, we're really excited about that. And that's basically all I've got. I kept it really short. We're raising a 1 million seed round right now. We're really early stage. We've raised about 300,000 so far. And if anyone's got any questions, suggestions, or wants to learn more, just let me know or email me at Stefan@WealthCoin.
Thanks, Stefan. Questions from the audience on WealthCoin? Any questions? Tony, you got any questions? No. Tone's got to have questions. This is his sector.
All right.
Are you at all worried about the security laws and SEC in denominating traditional assets in Bitcoin? What hedging tools are you using to make sure that the price of Bitcoin fluctuation doesn't affect someone's portfolio?
Yeah, so it's worth being clear that we actually don't do that ourselves. So we have a broker partner in the UK who accepts Bitcoin from us and simply provides us contracts on these equity markets. So we're not doing the hedging. Presumably, you're correct there that they're selling the Bitcoin, purchasing the other underlying assets, and then hedging or straddling the Bitcoin price to avoid volatility. And yeah, there's a fee incurred there. We pay the broker a fee, but it's not too hefty.
And one quick one. What about like the KYC process, which I personally hate, but
Yeah.
you have to sign 1 million pieces
Yeah.
of paper when you open a brokerage account with U.S. dollars. Foreign, for example, if you live in Australia, you can't trade the U.S. market unless you're a U.S. citizen. Is this something that you're nervous about because you might be giving people access from foreign countries to the U.S. market?
Yeah, this is something we think about a lot. So we're thinking about regulation almost half the time, I'd say, because it's a big deal lately, as Michael mentioned earlier. So we generally think about regulation in two separate baskets, right? It's the holding and management and transmitting of funds, which is sort of like an MSB or a money transmitter license, or a bit license perhaps, and then there's the, like you said, the sale of securities and all the regulation that comes with that. So in terms of the movement of funds, that's partly why we're partnering with Coinbase. So Coinbase is a registered MSB, and using their wallet infrastructure makes it so that we don't have to get that regulation right up front, and we can sort of umbrella underneath them as long as we comply with their compliance team. In terms of the sales of securities, it's basically a gray area right now. So because we're not exchanging fiat, and because the securities aren't denominated in fiat, and because it's actually a contract on the security, it's not necessarily ownership of that security directly itself, then it really isn't considered the sale. So we basically offer a way to track global equities, not necessarily to own them in the legal sense. Yeah.
Okay. Any other questions? Tone's my secret weapon if there's no questions. Make sure you watch his presentation tomorrow. He's amazing. Okay. Thank you.
Good afternoon, everybody. My name is Chris Mapondera from Zimbabwe. BitMari is a Pan-African money remittance company. We are looking at providing a service for remittance. Oh, okay. We are looking at providing a remittance service for the African diaspora to Africa. The World Bank quotes that $40 billion is remitted to Africa every year by the African diaspora. Now, out of that 40 billion, $4 to $8 billion goes for service fees. The total international aid to Africa is no more than $5 billion a year. Now, most African countries right now have realized the importance of the diaspora in terms of development of Africa for two reasons. One, they are the most educated of most immigrant groups in Europe, in USA. You go to every major technology company in the US, you'll find an African engineer, programmer, what have you. Whether it is Microsoft, wherever, you can go to Google and so forth. Africa has got about 1 billion people. That is why most people will become aware of Africa's potential. Right now, I hear so much complaints of, well, the Chinese are taking over Africa and so forth. But basically what they've done is to identify the opportunities in Africa. Now, ourselves as Africans in the diaspora, we are saying we're exposed to the technology, to the know-how, and we understand how the systems work both in the Western countries where we are and also in our own home countries. So we are the best conduit for providing development, in Africa. Secondly, Africa has had to leapfrog in its development over the years. I remember 20 years ago when we used to have the telephone lines going overhead from one joint to the other. There could be 2,000 people in between. We have no access to a telephone. But right now, the highest cell phone penetration in the world is in Africa, where you can go to a villager, you have an iPhone 6, contrary to what people may think. because I bought one. I know my cousin in a village, he is in school, he is computer literate and everything. I'll try to leapfrog him to be where I am and send him the iPhone 6. The same thing is now going to apply in terms of cryptocurrency. What we are saying is that rather than have Africa's development tied up with other people's fiat, you want to develop, you need $200 US. You've got to go through a whole process of transferring that $100 from US to Africa. But with the cryptocurrency, it means we are going to avoid all those limitations. That's why we find it attractive and why we want to promote it. We are here, we understand what it is. When we go back to Africa, they can understand us much better. You have heard of M-Pesa and so forth. It has made a lot of success, contrary to how people might have thought such a system could operate. So, with Bitcoin, we feel we can do the same thing. We have looked at Zimbabwe as our nucleus point, and then we'll spread from there to all the other parts of Africa. Why have we looked at Zimbabwe? In 2009, the Zimbabwean government, because of the serious economic situation they had, they discarded their own currency and adopted multi-currency system. So Zimbabwe has got a much higher degree of accepting innovative ways of tackling their development issues. Two, we've got a very receptive government organizations that are saying, look, show to us how cryptocurrency or how Bitcoin can be an instrument of development. We're going to look at this in the context of what role is it going to play. Zimbabwe is in the center of Southern Africa, but it's also very influential in Africa. Regardless of all the other political issues, the president, the chairman of AU, is a Zimbabwean. AU has got 54 countries. So what happens in Zimbabwe can resonate in other parts of Africa very easily. Two, Zimbabwe has got the highest literacy rates in Africa, about 93-94%, which means adoption of technology is much quicker and faster, which is a major advantage for that. So what we are looking for is that rather than come to you and say we need aid for blankets and water and so forth, we're saying we need aid for us to be able to introduce appropriate technology for the development of Africa. And today, cryptocurrency is the most appropriate technology for the development of Africa today, because it has no boundaries, it has no limitations as to who is going to control, how that is going to move from country to country and so forth. And as Africans living in this environment, we are saying we need your help to be able to provide and contribute to the development of
So let me just be clear. You mentioned aid, but you are a for-profit company and you are currently raising a round, correct?
Yes, right. I mean, we're a private company, we're for profit, and all we are saying that we are putting everything in the business context. And that, this is the place where you get the most out of your money than anywhere else. In most African countries, your investment is much greater than what you have, on Wall Street. We don't talk of 2%, 3% in Africa. I mean, you're talking of 10%, 15%, 20%, 40%, depending on area that you are going into. But because of limited information to this market, people don't seem to see the value of investing in Africa. They'll hear different stories, that are more probably politically tinged rather than really look at the reality.
So I'm going to ask a question just because there is a comparable company that has actually raised a fair amount of money. I think they've got 2 rounds in. I actually had dinner with her earlier this week, which is BitPesa. So how are you different than BitPesa, which took the M-Pesa concept into Kenya and now has recently moved into Nigeria?
Well, there are 2 things. BitPesa was created out of Europe. Then somebody comes up and say, okay, we look for local partners. But BitMari is created by Africans who have got a better understanding of what the environment is all about. We speak the language of development that our people can understand, and we see the relevance of why we should introduce whatever technology we introduce. Many of the foreign companies, when they go to Africa, they look mostly how much money are they going to make without looking at what are the consequences of what they are introducing. Okay? So, but from our point of view, we are saying no. We define what our problem is, and we are defining what our solution is. And we expose ourselves to groups like yourselves, where I may not talk very competently from a technical point of view, but I can tell you in terms of what impact that is going to make. 1 billion people.
So I met your partner, Sinclair, in Brazil last year at the La BitConf that Trace had mentioned. I'll be there again in Mexico City this year. And so Sinclair is a Zimbabwean, but he also lives on a plane in Silicon Valley, and he was in Vegas earlier this week, and Washington, D.C., and he actually worked with Mayor Adrian Fenty on his campaign in Washington. So he's really kind of a citizen of the world that co-created this with you. And as I recall, you're looking at what, a 1% charge to be able to have is the business model, and then you have relationships with Zimbabwean banks that perhaps others don't as easily have.
Well, yes. Let me just go to our team. We have assembled a team of both American individuals, American companies, and Zimbabwean individuals, companies, and institutions. For the American on the American side, we work with the Perkins & Coie, a legal firm that is assisting us in terms of looking at all the regulatory requirements in the U.S. and so forth. Then in Zimbabwe, we also have legal companies that are doing the same, to make sure we meet the regulatory requirements in Zimbabwe. From a technical point of view, Zimbabwe has got probably some real top young computer engineers, scientists, programmers, and so forth. But we also have American engineers, programmers. We've just brought on board a young African engineer from MIT who has been studying Bitcoin for the last 3 years, and to see what and how it can integrate into the African economy.
Okay.
Yes.
So I think we're out of time here. If there's one question, Susan?
No.
They're a remittance company to Africa.
Oh, okay. I'm sorry. So it's a remittance company? I'm sorry, I missed it.
Yes, it's a remittance company, yes. As I said, Africans remit $40 billion to Africa, but we wish to cut down the cost of remittances rather than, have 10 to 20% going to companies in fees.
Right,
we could do it at a much cheaper cost than that.
And how do you spell the name of the company?
BIT, then MARI.
MARI.
BitMari.
Okay.
It's
and
bitmari.com. You can get us on our website, yes.
Bitmari.com. Thank you. The last question is, did you name the companies that you're associated with in the U.S.? Did you mention those?
Well, right now, the most critical one is the legal company, Package and Coy, right. And also, we have also, relationships with companies like Coinaport that, are working with us, in terms of providing us with exchange.
Okay, any other questions? Yes.
Thank you. So I imagine one of the largest problems with remittance would be that many of the people receiving in Zimbabwe, as so many African countries, are unbanked and don't have a bank account. So what's the solution? I mean, it's easy to send Bitcoin from here to there. They could just have a Bitcoin wallet that they downloaded for free. The problem is getting the money into their pockets in a way that they could use it on the ground. So how have you guys, is your company trying to address some of that?
Well, yes. The people who make use of our services have to have a Bitcoin wallet. And then, for instance, with the Coinaport, we then exchange, the local fiat into Bitcoins, and then deposit that into our merchant account. And then we remit money directly to a bank that we work with in Zimbabwe, for which, a Zimbabwean can just go to the bank and get, his dollars. That is one way. And then two, Zimbabwe now utilizes, telephone money transfers. Okay, so you can have a guy in a very remote area, and then we work with telecom companies and so forth. That you can have the money transfer through the cell phone and so forth. So those are some of the mechanisms we are looking at.
Okay, one last question, and then lunchtime.
Hi. First of all, I'm very glad that there's an African presenter here. I do think that the African continent, for the reasons that you mentioned, will be very big for Bitcoin. For example, your example of the mobile phone skipping the generation of landlines. I think the same sort of thing will happen for credit, financial services, etc. in Africa. I'm actually doing something similar. We're not in Zimbabwe, we're in Congo, Kinshasa, which is the world's poorest country, Zimbabwe being the world's second poorest country. What we're doing, rather than remittance or aid, is actually providing jobs. My company, Microwork, is part of a global initiative to bring internet-based jobs to disadvantaged communities around the world. It's called impact sourcing. There's various. It's a very big thing in Africa, and I'm interested in bringing impact sourcing to these disadvantaged communities using Bitcoin. And the way I'm sort of seeing it is that in these communities that we will bring there, you can imagine the jobs coming in from the West into African communities, bringing with it money and developing skills into these communities. And I wanted to get your opinion of how you think that sort of model would take off in the very, very poorest of the world's countries, such as Congo, Kinshasa, where there really is no infrastructure. Certainly outside of Kinshasa, it's extremely rural, and it's very difficult to the electricity, for example, these sort of things are issues, water, that sort of thing. But still, the people there are capable of creating very good value. And I wanted to get your opinions on how you would see something like that taking off in Africa.
Let me just give two examples and maybe put things into context. 20 years ago, 4,000 white farmers in Zimbabwe grew tobacco, sold it on the world market, and they were earning something like $500 million. Today, you've got 100,000 peasant farmers in Zimbabwe producing tobacco and earning $500 million. Now, what it means is that way before this guy, his annual income was maybe $10. Today, he's now talking about $5,000 or $20,000. And And that is huge. With that, he can afford this thing and do anything. So for what we are talking about, it's really, I don't see where the problems would be as much as it is an issue of communication and coming up with a way that is relevant to the people. Many African projects fail because we feel for something to be successful, you must spend $1,000 for it, when at least $50 can do the job. And then you scale it up from there. Okay? So I think, in your case, again, it's really just starting off at a very small level. People believe when they see something. And when you do that, then it's much easier for it to spread. Otherwise, at times, sub-4 development is based on what the non-profits who are looking more at how much they are going to make out of it. They say, oh, well, we want a $500,000 project in DRC. Of that $500,000, maybe $50,000 actually benefit the people in the DRC. The other $400,000 is paying for hotels, for, high salaries. I mean, for somebody who lives in Washington, D.C., the apartment costs about $3,000 to $4,000 a month. And if he's doing a project in Africa, it's a 3-year project, he's spending $150,000 is going for nothing but rent in Washington, D.C. Okay? So I think we've got to change the whole dynamics of how we look at development in Africa. We are most appreciative to see something small that demonstrates its worth and that it is of benefit to us. I don't know if I answered your question, but I think, that's really what it's all about.
Okay, thank you very much. And we'll all be around the rest of the show, and you can ask everyone about their company specifically. They're all in fundraising mode. And thank you, Steve.